Hello guys, in today's video I want to share about something very important before I dive into the top-down analysis part. And if you have been following up with the video calls, or if you want to fully understand what I'm trying to share, then you need to pay attention till the end of the video. Alright, so without further ado, let me dive in. Alright, so in our trading range, where is the minor inducement? This one here is the minor inducement right here. The one I'm marking, that's the minor inducement. And I know someone is asking why I didn't pick this one here. Alright, we can clearly see that this one here is not a valid pullback right here. That's not a valid pullback. The valid pullback, or the recently formed valid pullback in our trading range, is that one there. And that's the reason as to why I am picking this one here as the valid inducement. I mean minor inducement, because it occurred before the change of character. We can clearly see the change of characters here, and this pullback occurred before the change of character. Right, so right now for me to start marking the POIs, in that case the order flows, or if the order flows are mitigated, then shift to the secondary option, that is the order blocks. Then I will need to wait the inducement to be taken out, and in this case our minor inducement is the one that is available on our trading range. Alright, so right now let me run price and see what price does. Right, and exactly right here, instead of price actually taking out the minor inducement, it ended up creating a new valid pullback. And since this here, the newly formed valid pullback is the recently formed, then we shift this inducement from where it was to the one that is recent, because we say that we confirm a swing point after price has taken out the inducement. It can be a minor inducement or a major inducement. It actually doesn't matter. So meaning I cannot say this one here is a valid break of structure because the inducement is yet taken. So right now this one here is our inducement, and this inducement is actually now a major inducement. And the reason is why that's a major, I explained it on my previous part. It's actually because this one here, you can see this recently formed valid pullback occurs, or it occurred after a change of character, after a break of structure. In this case it is a change of character, or let's say a bullish break of structure. So this means now this one here is our major inducement, and right now I'll be waiting for price to take this before I start marking the POIs. Alright, so let's see what price does. And right here, instead of actually price taking out the major inducement, it ended up creating another valid pullback on top of it without taking out the initial one. So this means we shift to the recently formed, because that's the correct major inducement, or that's the inducement because it's actually the recent. So the liquidity resting below the low of the recently formed valid pullback in our impulsive move, that's the inducement. And since it's above the change of character or the bullish break of structure, then this one here is the major inducement. And in this case we can clearly see that price has, right here we can clearly see that price has taken out this one here is the major inducement. And right now if price takes this out, then that's when I'll be confirming our swing point high. So, and you can see after doing that, right here price took out the inducement. So right now I can confirm this one here is a high, and right now it's the moment, or it's the perfect moment, or the right moment to mark the POIs. And like I said on the previous video explaining about POIs, I say that on marking POIs you should start by the order flows. Alright, so in our trading range, and by the way, the order flows we usually start marking them on the extreme. Alright, on the extreme of our trading range, I can clearly see that this one here is the order flow. Let me change the color so that alright, so this one here, you can clearly see this one here is the extreme order flow, and also you can see it's already mitigated right here. So shifting to the next one right here, the one that mitigated it, we can clearly see that also it's mitigated, and in this case its mitigation is not from this week, but its mitigation is from this pullback. The reason as to why it's not from here but rather from here is because this mitigation, I mean this initial mitigation, was by an invalid pullback, and a mitigation by an invalid pullback, it's usually considered an invalid mitigation. So this means the valid mitigation was from this here, because this one here was a valid pullback. All right, so on to the next order flow that mitigated our previous one. We can clearly see also it's mitigated right here. Price reversed and mitigated it right here. So this means our trading range lacks, or not lacks, but actually has invalid order flows, or all the order flows are mitigated. And the order flow is the primary option, and the secondary option is actually the order blocks, right? So right now, since the primary option is invalid, then I will need to shift to the secondary option, which is the order blocks. And I also showcased how to mark the order blocks, so I believe each and every one of you guys know how to mark the order blocks, like valid order blocks. All right, so let me just leave these order flows. And by the way, the reason as to why I didn't mark this order flow here, the one that comes before the inducement, is because this order flow, it's usually considered a smart money trap, because price has yet taken the inducement, and the inducement is actually the first liquidity that price is heading. All right, so right now let me mark the order blocks. All right, an order block is actually a refinement of the order flow, meaning it's actually a single candle inside the order flow that is associated with a fair value gap. So find a single candle on the extreme of the order flow that is associated with a fair value gap. And this one here is the extreme candle. And by the way, the color of the candle doesn't matter. So this one here is the extreme candle in this order flow, and it is associated with a fair value gap. The fair value gap, even if it's mitigated, the order block still counts to be valid as long as the fair value gap is not fully mitigated. On to the next order flow. We can clearly see this is the extreme candle, and I say the color of the candle doesn't matter. So you can see this is the color, so you can see this here is the extreme candle that is associated with a fair value gap, and I say that even if the fair value gap is mitigated, as long as there is some imbalance that is left here, then our order block still counts to be valid. All right, so let me check on this extreme order flow if there is an extreme candle that is associated with a fair value gap. All right, here I can see this one here, and this one here is the one that is on the extreme of our order flow, like on the extreme order flow, which is already mitigated. This is the extreme candle that is associated with a fair value gap. The size of the fair value gap does not matter. So right here you can see it's very narrow, but I said the size does not matter. The order block still counts to be valid. In this order block located in our mitigated extreme order flow, we can clearly see it's mitigated. So this means now it's invalid. And right now the only valid order blocks that we have is this one and this one. And I said that the order block that comes after the inducement is what we call the decision order block, and the one on the extreme that is unmitigated is the one that we call the extreme order block. All right, so yeah, by the way, there is something known as engineering liquidity, and we said if it's present on the trading range, we need to indicate it. Right here, is this the engineering liquidity, or is the above the engineering liquidity? I mean, is this one here the engineering liquidity? All right, we say that engineering liquidity is the liquidity resting below the valid pullback that is right before the extreme POI. I mean, on the low, since this is a bullish scenario, it will be below the low of the valid pullback right before the extreme POI. And in this case, our extreme POI is actually the order block. So is this one, or is it this one? I said the keyword on that, the keyword here is a valid pullback, and I said that this one here is not a valid pullback. If you remember, I said that's not a valid pullback, and if you know how to identify a valid pullback, you can clearly see that this one is not a valid pullback. So this means this one here is not the pullback that is right before the extreme order block. So then this means that this one here is our engineering liquidity. All right, so let me mark price and see where price will react from. Right, and here the opposite happens. You can clearly see instead of price actually getting into our POIs, price reversed. And I explained this on the previous video. Before this, I explained that we need a retracement of 3 opposing candles to confirm a valid break of structure. So this means now this one here is not a valid break of structure. And in this scenario, if you see like a retracement of like less than 3 candles, then this major inducement shifts to this newly formed valid pullback low, because the inducement is actually the liquidity resting below the recently formed valid pullback in our trading range. And so this one here becomes our new major inducement, because we said that the inducement is actually the liquidity resting below the recently formed valid pullback. And in this scenario, since this one here is not a valid retracement, this one here cannot be confirmed as a valid break of structure, and that's the reason as to why this major inducement shifts here. All right, so this means also the high or the trading range high or our trading range high also is not where it is currently, but right here. So that now is our newly formed high, but currently is not confirmed yet because price has not taken out our major inducement. All right, so let me continue running price. And exactly right here, the major inducement is taken, so our swing point high is confirmed. So this means now this one here is our confirmed swing point high, and if price now reverses and breaks past this swing point, then now this one here will be a confirmed break of structure to the upside. All right, so right now let's see what price is actually doing. And I can clearly see that price here wicked below and rejected. And if you are a true SMC trader, you know that this one here is a valid entry module. And to enter into this trade, I will need a good buying momentum. So right now, let's see if I will spot a buying candle with a good buying momentum. So right now, if this next candle closes with such a bullish momentum, then I'll confirm the reversal and take the trade. All right, so right now, let's see. Let me continue running price. And right here, you can see it ended up respecting that fair value gap. So let's see if price, all right, price is actually rejecting down. All right, price failed to give us a good bullish momentum. All right, price is actually failing the sweep. And exactly right there, the sweep has failed. All right, so right now I'll be looking to take the trade from our decisional POI right there, or from our extreme order block, or a sweep from the engineering liquidity. All right, so let's see. Price has mitigated the decisional and is actually giving a bullish momentum. So if this candle closes bullish, then I will take this trade. You can clearly see as price was heading towards the decisional, you can see this here is a very strong selling candle, signifying that the sellers were dominating, and then an indecision candle showing that the selling momentum and the buying momentum is neutral, and then now the buying candle with a good bullish momentum, signifying that the buyers are now dominating. And since price is reacting from a decisional POI, I mean a decisional order block, and a decisional POI mitigation is an entry model. So if this candle closes such a good momentum, then this here will be a valid trade. All right, so let's see. And exactly right there, we can see the candle closed with a good buying momentum. So right there, that's a valid trade, stop loss below the low, and target profit right here. So right here, since this one here is a major inducement, you can see the risk to reward is actually 1.47, and this here is a major inducement. You can see this trade is actually involving a major inducement. And the reason is to why right here I can confidently increase this, because I don't take trades with a risk to reward less than 1:2. And if you have the same role, then I can confidently recommend to always increase this one here to 1:2 if this one here is, or if the trade is involving a major inducement. I will explain that later on the video, so stay tuned in. Right, and right now I'll be running price and see what price actually unfolds. And you can clearly see price is heading towards the external liquidity, and I hope price will hit our TP. And exactly right there, price made it out to full TP. Alright, so this one here is a trade involving a major inducement, and you can clearly see what I've just done. Alright, so right now I'll be shifting to a trade that involves a minor inducement, and then later after that I will explain what I was actually intending to. Alright, onto this chart, we can clearly see that price has taken out the minor inducement as well as additional sell side liquidity, confirming this one here is a valid swing point. And then you can see price reversed and broke past our swing point, confirming a break of structure. So right now, this means we are currently in a new trading range, and it's a bullish trading range. All right, and I said that once you have identified your trading range, the next step is usually marking the inducement. So right here, where is the inducement? Is this one here the valid inducement, or is this one here the valid inducement? You can clearly see that all of these candles are engulfed, and this one means that this one here is not a valid pullback. And since that's not a valid pullback, then this means we are only left with this one here as the recently formed valid pullback, and that's the minor inducement. Why minor? Because it occurred before the break of structure. All right, so right now I will be waiting for price to take out the minor inducement before I tell myself marking the POIs. Alright, the reason is to why I picked this one also instead of these ones is because I said that you can see that all of these are engulfed inside this move, all of this move. So you just pick the minor. All of these are just engulfed inside that move. Alright, so right now I'll be waiting for price to take out the minor before I actually start marking the POIs. So let me run price and see what price unfolds. Alright, and price is heading down exactly right here. Right, so and exactly right here we can clearly see that price took out our right there. So let me actually rewind so that we see like where price is and where price is actually, so that we see what price is actually doing. All right, exactly right here. All right, so this means that this one here is now a confirmed swing point as the inducement is actually taken out, and in this case it's a minor inducement. And I said the right moment to mark or to tie yourself marking the POIs is after the minor inducement is taken out, and you can clearly see price has done that. All right, so right now this one here is the extreme order flow, and coming up to the next, we say that we usually start with the order flows. So coming up to the next, we can clearly see this one here is mitigated. If I extend, mitigated, So right now, in our trading range, all our order flows are mitigated. All right, there is something here. You can clearly see that this order flow wicked above. So this means here there is another order flow right there. So this one here is the other order flow. All right, but all of them are all mitigated. So this means in our trading range, the primary option is invalid. And right now is the perfect moment to shift into the secondary option. And the secondary option, we all know the secondary option is the order blocks. All right, so let's mark the order blocks. Right here, I can clearly see on this order flow, I can clearly see this is the candle that is associated with a fair value gap. Exactly right here. Yep, yeah, that's the candle that is associated with the fair value gap. On the next order flow, you can clearly see this here is the candle that is associated on the fair value gap. You can see I'm picking the extreme candle on the order flow, like the extreme candle on the order flow. The color doesn't matter as long as it's associated with the fair value gap. And the fair value gap wideness, narrowness also doesn't matter. All right, coming up into this one here is not a valid order block because you can see it's engulfed inside this bigger one right here. So this means in our extreme order flow, there is no any order block that is valid. If I was to pick an order block that is valid, I would pick this one or no. So in this case, this means that there is no any valid order block in this order flow because you can see the extreme candle, because all of this is an extreme candle, and this candle in fact is not associated with a fair value gap. And right here, all of this is the candle that is associated with a fair value gap, but you can clearly see that is an insider bar and gapped inside there, and we said we don't pick the child candle as the order block. Instead, we use the mother candle if it meets the criteria. All right, so right now we only have two valid order blocks in our range, and right now price is already on this one here. So let's see if price will make that ultimate reversal. And by the way, we have not yet marked the engineering liquidity. In this case, the engineering liquidity is this one, and I explained that why. So right now, let me run price and see what price does. Right, so let's see if price eventually, all right, you can see price failed the decision order block, and price is reacting from the extreme order block. And right now you can see price has rejected with a good bullish momentum. Right now this here is the perfect moment to take the buy. Stop loss below here and target profit, of course, on the external liquidity right here. In this case, the risk to reward is favorable, so there is no need to increase the risk to reward or to extend the risk to reward for even higher. And in fact, this here is a minor inducement. All right, I will explain that why. So right now, let me run price and see what price unfolds. All right, you can clearly see that price is actually heading onto our external liquidity exactly right there. All right, so right now the backtesting tool I'm using, price has stopped there. But if you check at GBP USD 1 hour chart, June 2025 price action, you'll actually see that price made it out to the external liquidity. So this means this trade ended up being a winner. All right, so the thing that I wanted to share from this video is that both the trades, the one involving a major inducement and the one involving a minor inducement, both do work. I mean, both are valid, but their odds are different. Major and minor, just like in English context, major is more significant as well as more impactful compared to the minor, and so is trading. The trades involving a major inducement have a higher probability of winning compared to the trades or compared to the ones involving the minor inducement. Then this means that if you only focus on trades that involve the major inducement, you may also end up increasing your win rate, though with a low trade frequency compared to focusing with both, it's worth it. And also, the reason is to why if a trade involves a minor inducement, I wouldn't recommend you to increase this. I mean, to increase the distance. Let's say you want a 1:4 because 1:4 sounds good. I wouldn't recommend you to do this because you can clearly see this here is the external liquidity, and a minor inducement is less impactful compared to a major inducement. So this means there is also some chances that price may fail to hit your TP as the minor inducement is less impactful. So right now it's upon your decision to make if you will only be focusing on trades that involve the major inducement, or if you will be taking both the ones that are involving the major inducement and the ones that are involving the minor inducement. But always know that if you only focus on the ones that involve the major inducement, you will end up increasing your win rate. Alright guys, so that is what I wanted to share in this video before we get into the top-down analysis. So if you made it to this far, this means that you have been enjoying the video, and so drop a like and see you in the next part.